Franklin India Feeder, Franklin European Growth Fund. When it comes to diversification, investors typically look at investing across asset classes like equity, debt, gold, and real estate. Besides asset classes, one can also diversify across geographies, as different countries perform differently under respective macroeconomic scenarios. Another reason why one should invest across geographies is the opportunity to invest in some of the world's largest companies like Mercedes-Benz, BMW, Siemens, and Audi, which may not be otherwise operationally simple to purchase as they are listed only on global stock exchanges. The best part is one need not use foreign currency but can make the investment in Indian rupees. Why invest in companies across the globe? It is important to diversify across countries as each country has its own strength and specialization. For example, American companies are known for innovation like Apple, Facebook, and Google. German companies are known for their engineering talent like Mercedes-Benz, BMW, Siemens, and Audi. Russian companies are famous for oil and energy like Gazprom and Rosneft. Chinese companies for their low-cost manufacturing, and Indian companies for their low-cost services. If you feel that all markets rise and fall at the same time, you are wrong. This chart shows that the Indian market topped in 4 of the past 8 years, while it was far below in the other 4 years. The US market topped in 4 of the past 8 years, the same time when Indian markets were struggling. Europe too outperformed India in those 4 years. Thus, by investing in other geographies, one can mitigate the risk of a fall in Indian markets. Hence, it is prudent to diversify globally so that any such fall in India is cushioned by gains from other markets. As the Indian currency depreciates, our imports get costlier, especially the cost of fuel, which is a major part of our import cost. At a personal level, foreign travel and foreign education also gets costlier. Investing in global assets through international funds help cushion this local currency depreciation. Let's look at an example to explain this better. Let's say a foreign fund had an NAV of $1 and the value of the US dollar was 50 rupees per dollar. If you had invested 1,000 rupees in a foreign fund 5 years ago, this would be worth $20 and you would get 20 units of the fund at $1 per unit. Assume that the US market did not change over the last 5 years. The value of 20 units will continue to be $20. However, the same when converted to Indian rupees will provide appreciation depending upon the value of the rupee. If the current value of the Indian rupee is 70 rupees per US dollar, in rupee terms, the value of each unit is 70 times 20, that is 1400 rupees. So if you had invested 1000 rupees in the fund 5 years ago, you would receive a 40% appreciation even if the US market has not appreciated and the rupee has depreciated. Any positive market movement will provide further appreciation to the investor. Thus, the fund provides dual benefits from rupee depreciation and market appreciation. What are the key benefits of investing in the Franklin India Feeder, Franklin European Growth Fund? This is a diversified equity fund of funds scheme that gives Indian investors an opportunity to invest in European companies. To put it simply, a fund of funds concept is a combination of mutual funds offered as a single fund. It does not hold securities in its portfolio, but other funds that have been chosen as per its investment objective. These funds can be either debt or equity funds, depending upon the objective. Fund of funds carry a single NAV. They are classified as debt funds for tax purposes and have a higher expense structure compared to regular funds. This fund provides investors with exposure to European economy by investing in companies across industries and market caps. This fund selects stocks based on 3 stringent quality criteria. 1. Strong balance sheet. The company must generate substantial free cash flow. 2. Sustainable competitive advantage through strong brands, a dominant market, technological advantage, and lowest cost company. And lastly, attractive valuation with a low absolute valuation, and important tools to limit downside risk potential. Ideal investment horizon. Since the Franklin India Feeder, Franklin European Growth Fund is an equity-oriented fund, we recommend an investment horizon of 5 years or more. Equity funds tend to display volatility over shorter time periods. But when one invests for longer periods of time, that volatility factor tends to get negated. Financial goals. Every investment you make must ideally be linked to a financial goal. And this goal could be of varied durations depending upon your investment needs. This fund could be considered as an investment option if one is planning to build a corpus for his or her child's overseas higher education, while planning foreign vacations, or even buying a home overseas. It is also suited for global diversification of the investment portfolio. Who should invest in this fund? This fund is well suited for investors with a high risk profile, are adequately diversified in the domestic market, and are seeking global diversification specifically in Europe. It is also suitable for those who have goals with foreign currency expenditure like overseas education for their kids, foreign vacations, or buying a home abroad. Investing in this fund could be a good alternative for someone looking to invest in overseas companies to provide geographical diversification in their portfolio. Let's take a look at the tax structure. Liquidity. You can redeem your investments in full or in part on any business day. Redemption amount is normally dispatched within 10 working days from the date of redemption. You could either receive this amount as a direct credit into your registered bank account or as a physical check which you can deposit into your registered bank account. What more do you need to know? Let's get to know some fund facts of the Franklin India Feeder, Franklin European Growth Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.